sound fabulous, or hey, you sound good. All right,
hey,
let's start. All right, everybody, this is Rachel.
Hi, Rachel.
Hello, Rachel Smith here with RE/MAX Achievers. I'm a local agent, and I'm here to convey information. We're doing a little show that gives some updates on the Frederick real estate market, just a little insight. We have fabulous guests on occasion.
She's so nice to me.
This is
I don't even know why you're so nice to me. I'm honored to be your first guest.
Oh, this is jpoling, a.k.a. JP with NFM Lending.
How's everybody doing today? Thank you for having me on, Rachel.
He's one of my buddies.
I dig it. She's very upset that I'm in a suit and tie.
I'm livid. He was supposed to come
casual today, but unfortunately the schedule did not allow for that.
He never listens.
As,
you can see all of our other stuff too. You're always in a tie. You make me look bad.
No, what do you mean? You look like a supermodel every time I see you.
I love you.
What are you talking about?
And he's not even paid to say that.
No, I'm not. Behind the scenes, she's very, very mean to me, just so everybody knows. Just kidding.
You can't say that. All right, guys. So this show is brought to you by Frederick.com and, of course, the Facebook page of Frederick County. I'm going to go ahead and give you a quick view so you can see. I think that is going to give us... Ooh, there we are. So the local Frederick County Facebook page, which is really cool, is there's a videos tab where you can check out all the videos from local businesses that are advertising their business. And then, of course, on Frederick.com, ta-da, you can find all of these links for small businesses that are local, including, look, there's a whole restaurant. Don't look at the Realtor tab. You can only look at me. There's a whole restaurants tab. So that is very cool. So, yeah, if you guys get an opportunity, check out Frederick.com and, of course, their Facebook page. And, of course, mine and JP has his. We'll put all those links. I guess I'm going to have to link a bunch of stuff. We can have the links.
Are they going to go below? Are they going to go up? Where are they going?
Below, down, around, somewhere on there once I figure that out with the technology. All right, so today, hey, everybody, what is happening? You're watching Real Estate with Rachel, focusing primarily in the Frederick County area. So the very first thing we're going to do is jump into some market stats. Let's do that.
Right. I liked it. That's what I was following up with you about last week.
I know. And
I'm interested to see what's going on. I mean, it's a busy time out there now. It feels like...
Well, it is, but here's the problem. I'm going to show you some comparisons, guys.
You're not listing enough homes.
We
need more homes on the market.
That's exactly what we need. All right, check this out, guys. All right, so currently the active inventory that we have is 759. Wow. That is down from last week.
Yeah, that's...
Oh, wait, you know what? I think it's supposed to say... Oh, no, that's right. Last week was 789, so we're down. However, the contracts are up. Pending is up. So some of those properties have gone under contract. Congratulations to those buyers and sellers and realtors. However, we need more inventory. Typically, it's nice to see somewhere in the 1,000 mark. Okay. It would be good to have a couple hundred more homes in the market here shortly, please.
For a couple more hundred would be nice. Yeah, I mean, we have first-time home buyers that are competing on multiple properties, but even those second and third-time home buyers, they are starting to feel the stress the stress of the spring market right now. Yeah. In January.
Yeah, it's definitely like last year. I felt like the spring market was like February, the end of February. This year it was like January 1st. Boom. Legit. Everyone's like, all right, we're done. Holidays. Let's go buy some houses. Let's sell some houses. However, the sellers, you guys need to pipe up because you're just not. You're not in it to win it right now.
Do you feel? And I know you talk to buyers and sellers every day, but do you feel that some of these sellers are concerned that if they sell their home, they're going to walk away with great money? They've gotten a great return on their investment, but do you think that they're scared of where am I going to go? Or can I make a parallel move, or can I...
Yeah, I love parallel moves. It has to be strategically planned. Right. I mean, every person's different. Right. I mean, it just depends on what their needs are. If they want to sell, rent, and then find something... Right. Or get under contract and then go shopping, which is the best thing to do, is to get under contract with your current property and then start looking. I think sometimes, I wouldn't say it's a mistake, and I think each time it's different, but sometimes what you'll find, and this is like pretty much all my clients, is, hey, let's go look at these houses, and then they're going to fall in love, and then they're going to have their house to sell, and typically it's better to have your house under contract, or at least in the MLS, or at least ready to execute. So, you go to put an offer on a place and you're like, oh, yeah, here's my client's offer. It's beautiful. All the numbers are right. They have a home to sell. Well, the first question that realtor is going to ask me is, hey, do you have an MLS?
Where are they at?
Hey, is it under contract? So, yeah, it's pretty good. All right, so for our market update continuation, let's jump back to the coming soon, because you guys know I love these coming soon listings. We've got a new one in Brunswick that doesn't have a picture, but that's okay, Sarah. Lamppost is new. This is a new one in Middletown. This one is coming soon.
Yeah, that's a popular one. I've seen it a couple of times out there.
Mess up. We're gonna double it up, guys. Here's a charter house, and I can do these links below too. Let me see if I can change my view. We're gonna do a continuous scroll. There we go. All right, so I love this house on Knowles Parkway. Here's one in Frederick Liberty Road. This one I love too. It got cut off, but that's Box Elder. Here's a new townhouse. I think this one's new construction. 2014, so pretty.
Is it over at Market Square?
Look, 319.
Yep.
Osprey Way.
Yep.
Yep. Oh, that one's pretty. 4-bedroom.
Yep.
And that one's an M unit with a 2-car garage.
In Linton.
Under $350K, so that's fabulous. Here's one in Adamstown. So we're kind of hitting new listings all over.
Where's that Adamstown priced?
$375.
$375.
And that would go USDA, wouldn't it?
That would potentially go to Oxford Estates. Yes.
Yeah. Yep. So some good information there.
Yep.
Bear Den, and that one's beautiful at 3 3/4, so that's good. And then we're coming to the end here because I think there's only about 30. Spring Hollow.
Those are some awesome properties that have come.
Like that one's look, 293, and that one's almost 2,000 square feet. And then of course one in Newmarket, which is good.
Yeah.
In Lake Lickmore area. Okay, so this one on Chelsea Circle that's coming soon, we're going to talk about that because that is for my fun fact listing, so we'll pull that one up later on. And then one in Wyndham, another one in Newmarket. I think we're done, guys. So that's it. That's pretty much it for our coming soon. So there's about 33-ish right now as of this morning. Yeah,
very cool.
Yep. And remember, that's a 21-day status. So if you're a seller, take advantage of that. That's 21 days that you get people like me talking about it.
Has to be on the market before the expiration.
Yeah, you have to have a listing agreement. Guys, like, comment, share, engage with me.
Right. Engage.
Be nice.
Right.
And give me your feedback and your opinions. We're going to do a little gift card giveaway. So like, comment, and share. We're going to go through and see who did all 3 of those. I'm going to try and figure that out on the YouTube page too. I'll have some help. And we'll give away a little gift card. I think we're going to try and do one for every show. And this is a Target one, so hello.
Well, how come you didn't ask me to bring a gift card? I'd have given one away, you know what I mean, for some fun stuff. You always look better than me. You don't have to try for that.
That's my buddy. So, like, comment, share, so we can give one of these fabulous gift cards away.
Perfect.
And we're going to try and switch it up each show as to what gift card and the quantities as well. All right, so next I'm going to showcase my listing, which is, it's the one you know about. It's actually in Liberty Town to me. However, let's pull this up.
I call it Union Bridge.
It's a Union Bridge address, guys.
Right.
All right, so this is Frederick County listing.
Yep.
1, 2, 3, 5, 4. Guys, single family home, garage, awesome lot, cul-de-sac, 285 USDA. I keep clapping my hands, and I'm sorry. I get yelled at for that. But really, this one is awesome. 3-bedroom, 2 full baths, half bath, finished basement, new roof, updated appliances. So that one is very cool. Let me pull up another picture for you while I'm doing that. You guys can check us out.
We've run a lot of numbers on that property recently as well, so it looks like it's getting a lot of traction.
So, off the top of your head,
yep,
at a $285 price point,
okay,
if someone were to do USDA,
100% financing.
So that means no down payment.
No down payment.
Let's say the seller were to cover their closing costs, which is typically like
6%. They can get up to 6% back, but I would say in that price point, you're probably going to be somewhere between 3 and 4%.
Yeah, like 3 and 4. So let's say anything that would pertain to liquid you would be bringing to the table is covered, right? What would an ideal? I'm gonna trick them on this one.
Way to put me on the spot.
What would a payment? What
are the annual taxes on that one? Let me take a look at the annual taxes.
Forgot about that.
I would say at the 285 mark. I mean, you're realistically going to be right around the 1,700 mark. 1,600 mark. I think with the.
Yeah, I'll check the taxes, but I think they're pretty decent.
I don't think the taxes were very high on that one, but again, the great part is a shameless plug, right? We offer the ability to send a Rachel Smith payment calculator directly to your phone.
Yes.
If you are interested in running those figures, but I would say just off the top of my head, you're probably going to be right around that $1,700.
So it'll be less than $2,000, right?
Oh yeah,
because I don't think the taxes are.
Yeah, and there's no HOA on that property. No HOA. So really, what you're paying is principal, interest, taxes, insurance. And then your USDA monthly guarantee fee.
That's kind of like the mortgage.
Yep, it's like a mortgage insurance, but it's a guarantee.
Just in a USDA.
Correct.
Okay. All right, guys. So, anyways, that was my listing. It's $285. Come on, USDA. We've got some awesome products out there for it.
Is that 3-bedroom?
3-bedroom, yeah.
3-bedroom.
But it's
with a
Union
garage.
Bridge, but with a garage,
Right.
in a fenced-in backyard, backing up the farmland.
Right.
But to me, it's Liberty Town. You can literally do cartwheels to
Where does
Liberty
it
Town.
feed into for the schools? It feeds into
Leganor.
Leganor. Okay, great. Highly desirable area.
Anywho,
Right.
that is going to lead us into the real estate.
Amazing.
So it's fine.
Right. I didn't want to have a spoiler alert. This is my first time on. I didn't want to be nerdy. So no, I didn't. What's the word of the week?
We're just winging it.
Right.
Contingency. And what is it? So the Webster Dictionary term.
I like it.
Did I even put that in there? It's a provision for an unforeseen event or circumstance. And then I did list some examples. These are just hitting the top of the list of what contingency possibilities may come into play. So we're going to have our inspection contingency, financing, appraisal, home sale contingency, or home of choice. We can get into that. And then there's also, if you're doing land and you want to build, which is, kind of my arena, feasibility study contingency. And then I'm sure there's a vast array of more. So my definition, because I like to put it in Rachel terms. AKA layman terms.
Right. I like it.
My definition, I say, hey, look, you know what? We've got obviously financing contingency. So no money, no house, right? Within that financing contingency is typically an appraisal contingency, right?
Yep.
So if that doesn't come up to par, so to say, then you get out because, again, no money, no house. Also, with inspections, if something were to go awry or we couldn't agree to repairs or anything of that nature, that is still considered a contingency or an out. So in Rachel's terms, I kind of consider that to be an out, like a protectionary clause, right? I mean, from other agencies
and believe it or not, I'm seeing a lot out there in the market right now. I mean, the appraisal's not so much. I mean, we have some really good values that are out there and some really good equity. I think that's just because of some of the changes over the last 6-7 years with how the approach is taken through the appraisal management companies.
Yeah.
But inspections, I've seen a lot of inspection issues recently where
and I am just
some homes may not be ready to go to market.
Yeah. And you can do pre-inspection too, and I think we're going to have an inspector on too, and we'll pick their brains in that aspect and see what services they offer as a pre-inspection, because that's optimal for a seller too.
That'll be a good show.
Yeah, you know what
I
mean? So inspections, it's almost like a second round of negotiations, right? Brace yourself for that too, sellers. So once an inspection's done, they're going to have this very detailed pictured report saying, hey, this is all what's wrong with that buyer, and that buyer agent is going to be like, all right, we want XYZ fixed, or sometimes it's A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P,
the whole entire list.
Or we want a credit, or we're going to get out. So it's almost like a second round of negotiations these days. Again, an out. So contingency, for me, it's a provision, right, to make sure that everything comes to fruition per the contract the way that it's supposed to. And those are also implemented with timeframes that will allow you to get out of the contract if for some reason it doesn't work out, right? If the inspection doesn't work out, if the house doesn't appraise, if for some reason you lose your job and you can't get financing.
You could probably do a whole show on the reasons that these contracts have
deals fall apart
based upon the word of the week this week.
I should. Yeah. Maybe I should.
There's a lot of contingencies out there, and there's probably been some very crazy stories.
Yeah, and I mean, you probably see it because you deal with different realtors that operate. You've probably seen other contingencies in contracts as well that are kind of like special contingencies, or maybe
we got one this week. Actually, it came in with a whole entire brand new roof being put on prior to closing.
Okay.
It's a 21-day closing, so I'm looking outside and it's 19 degrees, on Monday, and I get a contract in to close in 21 days, and they're going to have a new roof on by the time we go to settlement. So
I want to know their roofer.
Oh yeah, I mean that's a pretty tight timeline.
Yeah.
So
that is a tight timeline, which is good because we are going to talk about that. The time to final loan approval. But in essence, the word contingency, really just to break it down, that's your out, that's your coverage, that's your protection, that's your contingent on. And again, inspections, financing, appraisals worked in with that financing contingency. Now, home of sale contingency, there's home of sale, home settlement, and home of choice contingency. And all of those come into play when you're buying and selling real estate coinciding. So if you're a seller and you have found a house that you love, you put an offer on it where you're going to put a clause in there, a contingency that says, hey, I've got to close mine too. So home settlement contingency. And vice versa, let's say you're a seller and you've got a buyer that wants to write, we'll put that clause in there. Hey, you know what? We're going to accept your offer. However, we're going to put a contingency in there that we need to find our home of choice. And so we see that. So that's almost like a protection for sellers that are like, hey, you know what? Let's put our house in the market. Let's see what offers we get. While we're doing that, we'll start our shopping, but let it be known that whatever buyer comes, we got to put in there, hey, look, buddy, we'll take your contract, but we've got to find our house too, and we're not going to sell our bad boy until we find the next bad boy. So that's pretty much another protection. So there's ways now to really protect
there's a lot of them that are out there, and you know what? The seller's really protected with that kick-out clause. I've seen a lot of that.
That's a
recently,
good point.
I've
I'm glad you
seen
brought that up.
a lot of folks that are offering on these homes that have kick-out clauses that can come to the table, non-contingent, and basically the individuals that were in line before that are now removed out of the first position for offer.
That's literally what it is the kick out.
That's a kick out.
And typically it's 72 hours. So let's say, for example, if you guys have seen when I put up the market stats and it says active or active under contract or pending. So that active under contract, some of the time, I think most of the time, I think we're still trying to figure it out. You can still show the property, right? And accept backup offers. So let's say you're under contract, but buyer has to sell their house or they have to do X, Y, Z. Well, here comes buyer 2. They say, hey, here's an offer. Well, the sellers would say, hey, this is an awesome offer. We need to let buyer A know they got 72 hours to do what they need to do in order to move forward. So in essence, you're getting kicked out. So that's not very fun for buyer A.
But it gets interesting because I've seen buyer A, have that fire lit underneath of them, and before you know it, the price drop happens, and that's a really opportune time for buyers to kind of sneak in and take advantage of recent price drops because that seller really needs that contract in place to meet their contingency.
I've seen it happen a lot. On the vice versa, let's say you are that buyer A that's getting the boot, a way to protect you is to go in with a non-kick out.
Yeah.
But that's another show, I think.
I like it. That is another show. Sorry, went down a rabbit hole there. Sorry about that. Sorry.
All right, so, hi.
Word of the week. Right? It's a provision.
Yeah.
For unforeseen
event or circumstance.
There you go.
Or an out.
Right.
But we don't like that really.
Right.
We don't want to get out. We want to perform, but we have to be protected. All right, moving on. Main content is my buddy here, Jeremy Poling. I don't know why he showed up. I'm so excited.
I did, even though I was late. Sorry about that.
Just a little bit, but it's fine. We're not live or anything. So. Like, what? That's all that stuff. All right, what's the current rate?
Wow. So that's let's just get right to the chase.
What is it? What is it?
So
Should we change
actually this week we came down a little bit this week. Believe it or not, we saw just a slight adjustment from last week.
Down.
Saw a downward trend. There's a lot going on right now in the political arena, in the global markets. Right. I mean, we saw some of these trade agreements come to fruition. Within the last 2 weeks that have definitely shaken some of the markets. I mean, the bond market's still a little bit shaky. You also saw Dow hit 29,000 for the first time.
Yeah, I get the little alerts.
In our history. So our economy is doing very well. A lot of people are back to work. A lot of folks are now starting to increase their total household incomes, right? So when you have incomes going up,
you're making more, you can buy
more.
People
going back to work. The country's still working on our GDP, our gross domestic product output. So all of those things are intertwined, for our markets. We saw a slight adjustment, not to say that these were real big market movers, but I did see a drop this week of about 1/8%.
Okay.
Monday, markets were closed, federal holiday for Martin Luther King Jr. Day, but Tuesday opened up surprisingly strong, and by Wednesday and this afternoon, as of say 2 o'clock today. We were very consistent. So I'm saying, 30-year, conventional mortgages in the mid 3% range, anywhere from 3.5 to
which
to
is
3
still like historically low.
It's
even
very
to
cheap
me.
Money. Well, think about it. It's cheap money. I mean,
it's cheap money.
Yeah.
Even to me, it's even like in the fours. I'm like, all right, we're still grinding. We're still, so for it to be
our USDA today was priced at 100% financing with a 720 credit score. We were roughly 3.625.
Oh, wow.
That's very strong. Right. That's
So
very
let me
strong.
ask you this, because we're talking about credit score.
Mhm.
What is the
Without rescoring a client, so we have prime and non-prime products with my company. All companies are different.
Okay.
We set our base score or our lowest score for FHA products at 580. We do have
See,
some.
I see 580.
Yeah, I mean 580 is very low. We do have some non-QM, meaning non-qualified mortgage products that are.
Okay, so that's going to be like more of a creative.
It's an Alt A, not necessarily a subprime, but yeah, I mean there are programs that are out there as long as you have consistent work history and good income, assets or reserves that are put away with money for down payment. You do have the opportunity to even go down to a 500 credit score nowadays.
See, that's awesome.
Yeah.
Now, of course,
you're going to have to put some skin in the game.
I was going to say, they're going to, you took the words right.
30 to 40% down usually in regards to those down payments. But again, that credit score is a very low credit score, so the risk is assessed as such. And you're not going to have a 3% rate on that program.
No,
right?
but I still think it would be a killer rate no matter what. And
That's a
then,
500
right, because you're, and then the other thing that you can do for low credits, first of all, I'm sure once you pull documentation, you get all your ducks in a row and you're analyzing that each individual's. I was going to say, hey, if your credit score is that low, go for a rapid rescore. However, you may be able to say, okay, if you do X, Y, Z, pay this car off or pay this card down. And
we do have the analytics. We do have the analytics to take a look at those utilization.
Rapid rescore may not even be into play. And then let's say they listen to you and they give it a month. Would you be able to tell like 30 days? Can you re-pull it and you'll see the difference? Is it that quick?
Good question. So, right, two things, right? It's always a two-part process, right? The credit basically gets you in the door, right? The credit gives you the keys to figure out what programs you qualify for and what you may be able to do as far as mortgage types.
Okay.
Income is the second stage, right? So your income just lets you know how much you can afford. So credit basically opens up the options for you. Income lets you know exactly what you can afford.
Perfect. I love the way you just.
And honestly, if you're going to take a look at some of those utilization ratios and basically what that means to the consumers that are out there, meaning your credit limits versus the balances that you carry on those, which are reported.
Is that the same as DTI?
It's not the same as DTI. That's a whole other show.
It's another show. I think we've actually talked about that.
We'll probably touch on that today. But again, the utilization ratios, right? I mean, credit scores are all big one algorithms. So it's a mathematical equation.
Yep. So meaning you have $1,000 limit, it's better to be at like 10% or less. If you can't be at 10% at $100 or less on that card revolving, then go for 300 or less. If you can't be at 300, I've seen about
30%.
30,
I've seen about 30% being the threshold, right? I mean, if all of your accounts are held at 30% or lower in the utilization ratio percentage, and you don't have any significant derogatories in your history like short sales, foreclosures, significant, right? Bankruptcies. Those are the things that you look for. You're probably doing very well, and you're probably in the high 7s to low 8s if you're carrying only a 30% utilization.
See, 30%. That's
month over month, right? So if you're consistent now.
So it's the best case scenario if you've got credit card debt. If I'm, you got to put it in Rachel terms. If I'm understanding it, you want to be at 30% or less. So again, if you got $1,000 limit, take that bad boy down to 300 or less and keep it there consistently.
It gets tricky because you also need to pay attention to your statement dates, right? Because
the reporting dates. That's how we calculate our stuff. So we know all of our reporting dates.
So you know your statement dates. So, and most consumers don't know this, but in theory, when your statements are released, and I'm assuming you're following this in your household, right? When your statements are released, those are normally reported to the National Credit Bureaus within 5 to 7 business days.
Yeah.
So if you're carrying those debts over on a month-to-month basis, or if you're like most families that pay them down or make payments, strategically plan those payments to where you do not put yourself.
That's true, and we know about that now. So because we've done that. Personally, I'll say it. We'll watch it so that, hey, if we've got something and we need to utilize that, like for a business expense or something, all right, let's go ahead and do it. And then we'll look best if we calculate what that reporting date is and have it paid off by then, or That's typically how we do it. And then it will report zero balance or whatever once.
Consumers will tell me all the time, I can't believe that balance is still on there. We paid that card off last month and we pay it off every month. Well, strategically, when that payment is made, that payment, as most consumers will see, sometimes it doesn't even show up on that statement until the following month or at the beginning of the next billing cycle, right?
But you guys have access to call those, right, and say, hey, can
that's
you
what
verify?
we rapid rescore. Yeah, we rapid rescore that. Yeah.
There's always a solution.
Mm-hmm. There is always a solution. You're right.
Always
right?
a solution.
And a wise man once told me that bad news delivered in a timely fashion with a solution isn't necessarily bad news.
It's not bad news.
Right.
Hey, that's a good one. I'm going to have to use that. All right, next question from my buddy here.
Huh?
What's your favorite? This might be different. I was going to say, what's your favorite loan product and what's the most popular? But they might not. I'm sure you just like a easy
So my favorite loan product, are the consumers that we can actually help with first-time their first-time home buying experience.
That's the reward.
Sometimes we get some tough ones, sometimes we get some easy ones. Right now, we're seeing a lot of down payment assistance money out there for not only first-time home buyers, but second and third-time home buyers. Believe it or not, in the state of Maryland right now, they'll actually allow you the ability to receive a forgivable grant, even though you've owned a home within the last 3 years.
Are you serious?
Yeah.
We're going to have to put some info
Yeah,
on
it's so for me.
State, not Frederick, but state.
Right, state. So it is gratifying to me to see the smiles on the faces whenever you get to the closing table, right? I mean, people that never think that they can own a home. FHA, those loans are traditionally very simple. USDA for me is a little bit challenging sometimes because they're so constringent on their income, so I like a challenge.
Yeah, I do too, and that's really cool. I actually love doing that product. Well, of course, I'm not seeing the grunt of it from what you deal with, but I love it because it's something where in our territory, especially Frederick County, even Carroll County, Montgomery, it's like Goo Road up, Clarksburg Road over. It's the little sliver of Montgomery County that USDA will fly. But not in the city limits. So if you're in Frederick city limits or Westminster city limits, not going to go. But USDA, I mean, we're still, it's same as the stakes, right? USDA, same as that stamp on the stakes. It's a rural-backed loan. So I just love doing that product because it's like, oh, you literally brought, we've done one where people have gotten money back.
Their earnest money deposit back. Yep, they can receive the money they put into the transaction. I actually worked with a family yesterday. Young man, he's a Maryland State Trooper. Actually, went through the 2-year cadet program.
Okay.
They're not allowed to make any overtime right now until they hit a certain point within their patrol. And this young man thought he was going to have to wait for a year, 2 years until he was pulling in that overtime to purchase a home. We showed him a USDA product, and it blew. I mean, it blew his mind. So
problem solving, like navigating, like that's
really what I like.
Because if it was all the same, like you probably wouldn't do this. I would just stay home with the kids.
Well, make no mistake about it, right? So for every one of those success stories that are out there, you also have the families that really have to put in a little bit more work with you. And I enjoy that too because I go back to those families sometimes, and it's about 50-50. It's about 50% that will actually take our advice and put the dedication forward to
a little bit of work, a little bit of effort.
To put that work and effort in, and some, unfortunately, just whatever the circumstances may be, just can't do that at this time, or just may not have the motivation to it.
But what you do is what I love about you is you will set up a game plan, right? So if our buyer isn't ready to execute right away, right? Then you'll say, hey, look, Joe, if you do X, Y, Z for 2 months, let's that's happened 6 months down the road where it's like, hey, they did what we did, and now what they would have qualified for 6 months ago, now we're doing something different.
Technology now with predictive behavior softwares and things that are out there, even with the utilization software for credit rescores, it's great. And as long as those folks have the desire to be in the home.
Yeah, it's teamwork.
We're gonna find a way to get there.
It is. It's teamwork. Teamwork makes the dream work every single time.
That is true.
It's always teamwork. Which my next question.
All right. Hopefully, it's
I'm going to
skip
one. Yeah, because that one. How many people at any given time are behind the scenes? How many people touch the loan?
So
when someone comes to you, they're going to talk to you and be
Right.
like, hey, what's up? Here's my documents, da 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 da. And you're that main point of communication.
Correct.
But once you pass it to your team, how many people would you estimate
They
are
touch
involved on the loan side?
On the loan side, so again, we'll take out Realtor, we'll take out the title company, right? We'll keep them out of this.
Keep the good people out.
I have a loan partner 1, a loan partner 2 that I work with that help with calendars and make sure that everybody is where they need to be on what date and what time. And shout out to my team, Jackie and Amy. They are absolutely incredible. Absolutely. Our underwriting team, Bev, and what our purple team has going on right now, because we do work with the same team on a monthly basis over and over. So we become, basically accustomed to how they underwrite loans, how they calculate income.
You know what to expect when
we
it's
know
going
exactly
down
what what to expect from them. I would say counting the underwriters, compliance, appraisal, home inspectors. I mean,
no, without home, just on the loan side.
Just on the loan side.
So processors, underwriters.
Yep.
I guess we can count appraisal.
Yep. You have compliance review. You have your disclosure desk. I mean, there's probably a good 15 hands that are in that loan, because by the time you get to funding, you got to remember you have post-closing specialist or pre-closing specialist. You have your closers. You have your funders. I mean,
your funders. So we want
to make sure that money gets there on time.
So it's literally like,
she doesn't get paid on time. You know who hears about it. You know what I mean? Just kidding. But sellers and buyers want their money at the table on time.
Well, that's the thing, because
it's a very stressful situation.
Done and executed appropriately, that's when Rachel goes kung fu mode, and then that's when I start to do my stalker mode, calling people, what's happening, do it now.
There's nothing more awkward than to be sitting at a closing table after the paperwork is done and have no money, and be sitting around,
and that's happened,
and waiting waiting for funding to come, and you have buyers and sellers that are in this very awkward, do we talk, do we not talk? We've already exchanged keys. We've talked about the postal route. We've talked about,
we've cried, we've kissed, we're ready to roll. Where's the money?
We talked about Karen next door and her crazy puppy that barks at 3 a.m., and sitting around, and then, at that point, where's the money? And that's really when your lender is in the hot seat, because, deliver on time, on budget, with a customer service experience that makes your referral partners.
Yeah, because then it makes me look bad. Right. Especially when I'm like, hey, call JP, he's going to hook you up. 100%. And then when we get to the table, that's the last thing that they're remembering. It's not how fabulous Rachel was throughout the process. It's, hey, on closing day, we had a delay. It wasn't as peaceful. It wasn't, because that's monumental. That is either a seller's last experience selling their home, or a buyer's joyful experience buying something. I mean, even with investors, you
visualize it, right? You sign the paperwork, you're done. Everybody stands up, they shake hands. They give you this very emotional hug and a thank you. You go outside, you hand them a bottle of champagne or their beautiful closing gift. They're off. They want to go get the house moved into.
They've got movers. I've had plenty where movers are waiting as we're signing papers. So it's instrumental that money gets there on time. Which, I mean, having 15 plus more people, because I don't think sometimes the consumer realizes how many hands are in the pot. And if that's just on the lending side, so we've all got to turn that wheel together.
And that's not counting title, home inspectors, that whole other side.
That will be another. Right. You guys got to tune in and watch for that one.
That's a whole other show in itself, probably.
Time to final loan approval. How long does it typically take to close a loan if it's all good in lender land?
Okay, all good in lender land. So the great news is this year at NFM, I mean, we knocked it out of the park. I mean, we had a phenomenal year, and every organization, every firm is probably going to be a little bit different. We're blessed to be a very large nationwide company. Right now, we're a comfortable settlement, 21 plus days, right? You start getting inside of 21 days.
You just did one for me that was like, you were like, Rachel, are you ready? Like, we're done.
We do them all the time. I mean, we get requests that are, 14-day closings all the time.
Yeah, but you can do those if all the stars align.
100%.
You can knock it out of the park in 14 days.
You just talked about the people that are involved, right? So you have some moving parts that are there. You need to make sure your title partners are on board, right? How long is it going to take the abstractors to get that back? The appraisers will turn that around in 24 to 48 hours. but you're going to have to pay them, right? They're going to charge you probably.
We're going to have an appraiser on too.
That would be awesome.
So we're going to inspect we're going to get all those people. We're going to verify and make sure he's not lying.
Right. Fact check me.
Oh, we're going
Fact check me. Right. So
you know,
again, you can get these loans done 10, 14 days. You know,
I mean, that's
but
pretty stellar.
Again, you know, if you have 21 plus days, don't stress everybody. Right. I mean, we can get it done, but
I mean, typically, when I write my contracts for like an FHA or even a conventional, if there's no home sale contingency or home of choice contingency, I'm writing them for about 35 to 45 days, dependent on my client's, you know, hey, I need a little bit extra time until I make that next paycheck, so let's put it out a few days. Bearing in mind that that's all going to come into play when you write your contract. So if a seller's ready gets to going, obviously having a quicker close time is going to be beneficial and put you ahead of the game than these other buyers that are writing 30, 45-day escrow timeframes. So it's good having a power player in the lending industry that can back that time frame. So when I call him and I'm like, hey, buddy, I wrote it for 21 days.
And she does. She does. That's a true story. That's a true story. Yes.
Then I feel like the pressure won't be, I'm not going to get yelled at as much.
Right.
Okay.
Correct.
Which brings me to my next question.
Is this the one you skipped? Because I feel like you skipped one that was going to be a curveball. Like, where'd you go with that one?
Oh, what are points?
Whoa, points. So, basically, when the terminology that you hear, points, right?
Yes.
The correct terminology are discount percentage points that a consumer would have the opportunity to basically prepay interest
at
a discounted cost to lower their interest rate. So, meaning that you can advance and pay for interest at the settlement table. And in theory, it does create the opportunity to buy your rate down.
So if you have a little extra cash that you want to put in the transaction, and you're more concerned about your monthly payment, you can say, hey, I've got an extra $5,000. Will that put a dent in anything?
Whatever it is. I mean, it normally equates, and this is where we start to get a little bit micro into terminology within our industry. But an interest rate has a certain price behind it, right? And that's the mortgage-backed security world and how that's sold as securities. Another show, right? So for each interest rate, there is a certain price that the consumer will pay. And that price, if you pay that price in advance to buy that interest rate down, you can do that to pay those discount percentage points up front at a reduced rate to then get
and that's just included. That's included in your closing costs, so it would just be that much more. Whatever's agreed upon that you would bring to the table to close. It's one and done, and then that will influence your mortgage payment. Because
it gives the consumer an opportunity to prepay advanced interest to receive a lower note rate, giving them a lower monthly payment at a much lower interest because, again, you've paid or you've bought that rate down by those discount percentage points. That's pretty cool,
though, because a lot of people don't realize that that's possible. I know I've got a lot of clients that are very rate driven, but there's so much more behind it too that's going to kind of come into play.
It's gotten a bad rap because it's not normally explained the right way. You got to keep in mind a mortgage is a financial vehicle to help drive your real estate investment.
Yes.
So when
leverage it,
by the time it's spit up, regurgitated, and you hear points, oh, I'm not paying any points. Jeremy.
Yes.
Well, let's talk about it because
that's true. Because people get turned off on that.
They get turned off, and it may not be for every family that's out there. I'll tell you right now. I actually had a conversation with a family today, actually, where their time in this property would not warrant them paying that advanced interest.
It wouldn't make sense
because they wouldn't have met the break-even point in which they then start to.
They would feel that kickback. Yeah,
they wouldn't recoup the cost up front.
So that's interesting too, because if you have somebody that's like, hey, you know what, I'm going to buy this and hang out for about 5 years, then definitely that's probably not going to be the ideal thing. Right. Or again, it depends on their financial situation.
It just depends on loan amount, cost, and things of that nature.
But it is possible. So okay. All right, points. I mean, that's pretty much
just like closing costs. I mean, when you really start to look at closing costs, and this is really what consumers should start really emphasizing on, not necessarily the total the total points paid, but look at the total closing costs because there are some fees. There are some fees that are built in there.
Closing costs. That's including your down payment. All of that cash to close is typically what I educate my buyers on and sellers, right? Cash to close. If you got to bring cash to the table or what have you, then that's pretty much what I
spend
loved it.
and emphasize to always review those offers because again, the markets are the markets. We sell a certain commodity, and that commodity has a price, and we are all relatively the same seller of that commodity, but we may just have different prices.
Yes, but I think that you get what you pay for.
You do get what you pay for. I mean, you can't. I always say you can't really put a price tag on great customer service.
I think you can't, and then the
until
knowledge
you've
base
gone through
and the protection.
Until you've gone through a very bad transaction, and then you realize where that cost or that sticker price of great customer service.
Yeah,
that's
like a series.
That is a series.
I wouldn't say that's a show. That's a check back in the summer. Who out of the two of us, who calls who the most?
Well, I've recently become accustomed to trying to interrupt your gym time because I know you only get a little amount of time to yourself with a very busy family, very busy career. You're a wife, you're a mother.
He does it. I think
you
he
run
does
multiple
it
businesses,
strategically.
Right?
He knows when I'm with my boo-boo Carrie. I wonder if she's watching.
Right.
Then I feel like that's when you're like, oh, I know she's at the gym.
Oh, I know she's at the gym. Let me call her. Right. And I just make up things to call her.
And then he'll leave voice.
Why does everybody hate voicemails? Justin yelled at me about voicemails today.
Justin's on my team.
Why?
We see that you call. We'll call you back.
But let me ask you a question.
It takes all my voicemail time up.
When you were a young lady, when you were how do I say this? Let me just back this up here. So at one point in your life, was there ever a phone on your wall that did not have caller ID? Ever?
Now, no, I'm old enough. 25, so
I'm old enough to say that I unfortunately had a phone on my wall without a caller ID.
No, I remember my mom had one, and it had the curly Q cord, and it was long enough where it would wrap around the wall in the other room.
Yeah. So years ago, kids, we used to answer the phone without knowing who was on the other end calling us.
And it was not cool. Oh, my gosh. Who yells at who more?
You yell at me more, definitely, 100%.
That's true.
You do.
That's true.
Seriously.
You don't even have to fact check.
Right. I don't.
But in a kind, nurturing, loving manner.
Okay, let's role play. You want to role play about the EMD?
No.
I won't. I'm just kidding.
Don't say that, because then Old Town's going to be like, Rachel? Yes, sometimes
No.
As long as my clients are okay,
right.
I know everybody else will be cool. But sometimes I got to remind them that it's all good.
But remember, the rule is this, and I tell you this a lot. Nobody panics in the loan process
he does tell me that.
Until I panic. Because when JP panics, then everybody should panic. And you've never...
You know what? I don't think I've ever seen you really panic.
You've never heard me panic, and that's the thing. But...
You've heard me panic.
I love it because you're very passionate about helping your clients.
Yeah, I get really
upset.
And
you want to make sure that everything is so perfect for them that sometimes you kind of get caught up in that moment, I think. So I dig it. I mean, that's great customer service.
Not a bad moment to be caught in, but okay.
Well, no,
all right, we got to wrap it up because everybody's getting bored. All right, so now you know about us.
Yes.
He'll probably come back. We'll see. Maybe he'll make it on time, and we'll go from there.
So do you roll out a schedule? Like, how do I find out like who's up and coming? Like, what do you got going on? We've already talked about home inspectors.
Yeah, I'm getting to that. This is only my third show, so y'all are going to have to roll with me.
Have you told them about the new studio and everything?
Yeah, we're having a new studio, and so you guys will be able to check me out. As much as I love Craig's place, I just can't come to Thermont all the time. So,
got it.
With that said, let's just jump in. I'm going to do, so to wrap it up from here on out, I'm going to do a fun fact. Typically like a really cool listing or something that's like, oh, this is really cool. It's a local listing. So for this week, I actually pulled two because I couldn't decide. Two listings that have the biggest. So what's the biggest home on the market right now? So let's check it out. Boop.
All right.
There it is. There's one of them.
What is that cool thing?
So this is 6100 Burkittsville Road in Burkittsville. And I forget what the square footage is. I'll have to go back and look, but look how beautiful it is. And it's
single
listed
family,
at
looks like
3.5.
an old farmhouse, old plantation home.
It is gorgeous, and I did an old one last time too, but I'm just, obviously you guys know where my sweet spot is. I love the old homes.
So this is active right now?
Yeah, this is active right now, 3.490. I believe there's some decent acreage in it. Let me switch back to this view, and you guys can see.
Wonder what the whitetail look like on that property.
I know. Hold on a second.
Think there's any deer out there in Burkittsville?
Yeah,
There's
probably.
monsters out there.
Burkittsville
There's
is
definitely monsters
awesome.
out there.
It is awesome. All right. And so here's our synopsis. This is going to give us some information about this actual listing.
Okay.
See, look, everybody's calling me right now. They're ready to go.
Yeah, like, get off of there. What are you doing?
Are you done yet? Okay. So here it is, guys. 5-bedroom, 3.5 bath. And so I was wrong about the 60 acres. It's 160 acres.
Yeah,
so
that definitely has some beautiful whitetail on it.
Stunning. Yes. Look how gorgeous it is. Okay, so 6754 above grade. So almost 6,800. We can round up 6,800.
Man, what a cool property.
And I got to pull whose listing this is. So thank you for letting me share it because I forget who it is.
I played the Powerball in the Mega Millions, so I might be able to get out and take a look at that one soon. Yeah.
Okay, and then the other one that I love. Sorry about my screen. Bear with me, guys. You
Chelsea Circle.
Yes, so this is by me. I got to represent Mount Airy.
Yeah, I like this one.
Yeah. Yeah, I actually sold a place on Chelsea Circle kind of recently. Remember?
I remember, yeah.
All right, so here we are, guys. This one's actually listed at a killer price at 1.8. It's primarily an equestrian property. Look at that. Look how stunning this is.
Very cool. When was that built?
Look at that double stair. Look at the great room. I have to look.
The great room's amazing. That fireplace.
Yeah, so this is just a quick synopsis. Yeah. So anyways, the square footage on this bad boy is... I'll have to pull it up again because it's not coming. Well, I guess I'm going to have to give you guys an update later on that because I can't pull it up right now.
Updates to come later.
Update will come, but it's coming soon. So I believe it's supposed to come in the next week or two. I'll keep you posted. But it was one of the larger listings. I think it was 11,000 square feet above grade or a little bit more. And then, of course, you've got all the equestrian stuff that comes with it, too, which has, like, the stalls and barns and the land. And then, of course, it's in Mount Airy, so, I mean, hello. Last week, we had a question about the tax rate for Frederick County, so let's talk about that.
This is a great document. I say this out a lot. Yep.
Frederick County tax rates.
Great document.
And it gives us the state.
Great document. Also gives you the municipality rates that are there for the calculations. Actually, there's some special taxes that are out there, too, so please pay attention to a couple of the special taxes that are out there. I believe that they removed the Brunswick light tax. Actually, is it down there, Brunswick lights? The lighting districts that are down there. So pay attention to that because there is a little add-on that's there as far as the millage scale. The systems benefit charges that are there. Again, whenever you're looking at new construction, this is incredible because from a lender standpoint, when I send a quote, I don't want to just pull a number out of the air and send it to your clients and say your taxes are going to be X, right? We need to know what those numbers look like, and that's basically what the assessors are going to look at. And we can give you, pretty good idea using the correct millage and the tax rates for the proposed year.
For $100 of assessed value.
Exactly. Yep.
So yeah, you guys will be able to see that. I can try and do a PDF copy in one of the comments. And I think that about wraps us up. This is a really long show. So if you're still watching, I think we've been like on an hour.
All right, cool.
It's been long, so we'll try and keep it short and sweet next time. Any questions? Again, this is Jeremy Poling with NFM Lending.
Thank you for having me on.
Stellar lender.
Thank you.
Any questions? I will link his contact. How can they reach you?
You can reach me directly at jeremyspoling.com. It's my website with the information. Talks a little bit about my team. Cell phone number 301-676-5506. And
I'm Rachel Smith with RE/MAX Achievers. You can find me at rachelsmithrealtor.com or just send me. We will catch you on the next one, and I will be answering more questions. I don't want to keep going on and on, but I do want to give my opinion on new construction versus resale. So we'll make sure that that's a point to be in the new one. So thank you guys so much for tuning in.
Have a great weekend.
See you next week.
All right. Bye.
Bye.